Hi, I'm Bruce Board from the Insurance Club of California, and I want to talk to you about how much homeowners insurance you should buy. Your professional insurance agent has tools with which to figure out the exact amount of dwelling coverage you need. I'm familiar with, and most insurance agents have what's called RCT, Replacement Component Technology. With this tool, we use using the factors of the year the house was built, the square footage, and the quality of construction, and the type of roof and electrical panel and all the things that go into making a house. And we can come up with a real dollar figure, which includes contractors' overhead and debris removal, and thereby come up with a real solid figure for coverage A. That's the dwelling amount. That's the amount of coverage you should have on every homeowner's insurance policy, or even a dwelling fire policy. You need to know how much coverage is there, and you don't want to over-insure a policy. Just because you paid $500,000 for a house that only cost $400,000 to rebuild, there's no reason to pay for an extra $100,000 in insurance. Now, there actually might be a time when you do need to pay for extra insurance, and that's when you're insured with the California FAIR Plan. The FAIR Plan has no dwelling replacement coverage at all. I know sometimes they say they do, just consider it not there. Therefore, if you have a loan for $500,000, the FAIR Plan or the lender is going to require coverage up to $500,000. Even if it only costs $400,000 to rebuild the house, they need to protect their loan or their assets. So in that case, you might need to pay for extra coverage. But your typical homeowner's insurance policy, you should figure out the actual rebuilding cost of the home, thereby insuring just that amount. And then depend on the quote replacement cost unquote of the dwelling. By that I mean there's an extra coverage of 25 or even up to 50%, depending on your policy, that will go over the $400,000 to cover such things as building code upgrades or new ordinances that are going to require you for what's typically called in the insurance field as betterment. Your house was built in 1960 and it has this size thickness of walls, but new codes or things that are going to make the house better require this size walls. It's a little bigger, maybe it has energy efficient windows, whatever the ordinance is, it's going to cause you to have an actual better house than was there before. But because of building code upgrades, you can't build the same house that was there. So talk to your insurance agent or professional. Find out if they know what RCT is and if they can do something similar. It's not always called RCT. Sometimes they have other names for that replacement component technology. And find out the right amount to insure the house for. Therefore, you don't have to pay for extra insurance on the house just because you paid more for it because the actual cash value is more than the rebuilding cost. I'm Bruce Board with Board Insurance in Westlake Village, California.